Ladies, gentlemen, GBPUSD, the pound, my pound of flesh. Okay, so Brexit, over here she goes. Not going to be, whoops, wrong, is going to be, boom, inverted and down again, target made, funnel thrown forward. First upside in a new trend. Yes, that happened. First upside should lead to overperformance. Up she goes. Makes second interim over here, pulls back, grinds toward target not yet made, reacts out of rising wedge after bouncing up after a falling wedge. So you got up almost to second interim, falling wedge all the way, support on funnel, pump, grind in another wedge, failed to complete the pattern yet, sell off out of the rising wedge, then major push through, target made first time at that level. Descending squeeze setup with a flat base, where the flat base is occurring at the second interim as your support. Key level of significance, just run there, supported there, just run, basing out, rejection candle again there before you start moving up and away. That's all occurring in the zone where you have a legacy funnel, which is one of the reasons why you battled a little bit once you started getting to this point. You see the move up, battle a bit, only actually broke here, touched there, broke there out of the legacy funnel of the inverted. Anyway, so flat bottom, moved up, squeezed again, formed another structure, a bit of an ascending structure. I'd call this probably in and around the retrospective draw category. So you get another target that's generated in another wind up here as part of what was going on. Could argue it broke from quite deep. That gave you a new target level, and that was made overperformance now to this first setup in a new trend. Overperformance done. Then you go into a blow off and a beginning of a falling wedge, bounce on this grind line. This plane was clear even in this potential upside structure that I've got here. Bounce there, up again, bounce there, up again, eventual major rejection, failed on the second time, kind of almost a double top. You could argue that that would have been your apex point for that double top. Double tops are interesting, but they're not super prolific, but they are interesting. So we'll pop him in and put him in there just to keep him for future sake's interest. Where was the key round number? That was clearly both run by both of them. I'd probably say the 143, got to go 143. We can see it's clearly overperformed anyway, so I wouldn't take much higher than that. That was, again, over here. So it wasn't, they were kind of in the middle of a number of round numbers there. I'd take it as I've drawn there. Downside there. Where did it bring you to? Yes, target made, and then some pushback for a while. So pound was in after making a grinding resurgence post all the Brexit shenanigans and everything that went with that, Trump election, etc. Grinding resurgence, overperformance to the original pattern, another wind-up pattern that made double head and shoulders, double top to a double low, then churned here for a while. It was also, again, that second interim, that target range, and this funnel range. So if I was on my draw pen on the surface, I'd be coloring in this area here from the 132 down to the 129. This is a bit of a fat zone where we've had lots of interaction on the way up and the way down. If I could get reliable volume by price, I might throw it down. We can see what the broker's volume by price will give us if we like. My suspicion is it's only ever going to be a proxy, guys. Let's pull it over and see nonetheless. I suspect that area that I've highlighted will be a zone of some interest. Are we going to get any data? There you go. So here's that target down to funnel. 4 biggest histograms, but for the axis of the first in a new trend, which is typical of HVF method on your volume by price. Your midpoint in there. So apart from that histogram, which was validating the first in a new trend, your 4 biggest histograms are here between the target and that funnel. So we've now fallen through recently in the daily time frame that main area into a slightly lower volume vacuum pocket, which could allow a spill. Where does the support start coming back in? At the legacy funnel of the first inverted, the first upside HVF in the new trend, otherwise quite low. Where does that start? It starts here. So the very long one, and then here. These two quite small. That's quite small. So the possibility for downside, if dollar strength reasserts, could still see you revisit to the 125s, but this will be a layer of support, the funnel, and particularly that key histogram that runs deeply through the main vein of our original HVF setup to the upside. So if we pull that through, by the way, this is broker, so it's proxy FX volume for all those that will say. Different brokers might have variances, but it's a decent proxy of where everyone was engaging. So it's indicative, not absolutely accurate. So while it does look like there was a little bit of a buy up here, I'm not sure that this downside is all done. There's still scope for it to lean on the funnel, but I would expect that the support will start to come at some point if it works its way a little lower. Let's run you into the shorter time frame so that you can see how it rolled. Trend down, you can see these levels. That's the target of the first, that's the interim of the first, that's the bounce. You're now in the funnel of that inverted. You rally, but it's a flag like channel rally. You come back down, you come back down. That's a bit of a squeeze in that was wedge-esque in a falling wedge sense. So eventually there was a bit of a bounce, so it was slightly capitulative. You get your bounce, then you get your inverted on a micro time frame. Again, so you might argue you could have even have taken that as a potential part of the inverted. Let's read him out and put him in a similar draw fashion. So you could have had that to that, and that would have given you a target if we draw all the way down. So this is how we are rolling with HVF method, and how this little down leg might have played out. All leaning on that second interim that was significant, plus its tie-in with the red stop of the of the inverted to the downside. This was in the final inverted to the melt up low. So that was post Brexit. More bad news just rolling out of the UK as people were panicking about how the world's going to end, because we won't have our EU masters to tell us what laws to write, and we won't have this big bureaucracy to support anymore, and what's that going to mean? We won't know what to spend all our money on. So that's the target. What do you get? Another little inverted wind up, probably at your second interim or just past it, to get you home. So let's drop this a little bit. We're on too high a time frame there. We drop to the 1 hour, and you can see this all a lot more clearly. Down, down, down. You get the broadening structure at your target. You get your little wind up over there that I couldn't help but draw because it's fun. And I love the fact that HVF method is generally an awesome way for analyzing charts and gives people real stops, real targets and places, so that they can set and forget because they have other things to do, and the potential for being a lifestyle trader is indeed still there, and getting away. I'm going to go swim in the sea, although of course it is a weekend today, so I mean you can do that anyway. FX markets aren't open, Francis. Anyway, broadening, spill, flag like. That's your down leg from there. That'll mean your down leg to here. What do we have now? For me, danger of rising wedge, and hence why I still think it could have possible realm to go lower. Rising wedge is a structure, something like that, and off you go through that, and you're grinding up in a very weak fashion. Let's take it down one more time. Let's go to the 15-minute, bring it all into context. A little bit of resistance here. You see you're resisting at your break point on this flag that I drew for you here. Again, a grind line, spill lower. So this could have wedge type structure, and you could sell off from here. There is a bit of resistance now where previously there might have been support. You had a key level of significance at the 127.5. Quite a natural round number at 125, 127.5, 130, and you were just running it there. It could be a key level of significance, worth sticking it on for all the fans. Bomb, bash, like that. So I don't assume that the dollar strength period is at all over. And certainly maybe the euro weakness is going to get worse, and I think it's going to happen with a bit of dollar strength. They kind of are bipolar to each other. A little bit of a grind, a little bit of a falling wedge that gave you that move up, but it wasn't too far. Marginally higher high here than the previous one. Still resisting here at the 127.5. That's where you ended Friday. So you've got my take on the pound. If you want to find out more how to analyze charts as we do, understand the real theory about what we're talking about here, how price is what matters. You'll see most of this is about horizontal lines and key levels of significance. Derivatives, options, all sorts of things are based on prices, key logical round numbers. You can pop over to our website, www.themarketsniper.com, and we will have a free webinar on it's not what you make, but it's what you keep. And you can decide at the end of that, because there will be an offer, if you want to find out more and you want to engage with us. Not for most people. Trading is tough. By the way, that 127.5, really interesting from that spill point. So it was with support there, support, you wound up to break it. Then it was resistance here, just run by the H1. Then you pumped over it, you came back and respected it, you pumped back down to it. That 127.5 is a key level of significance and a round number as well, that you might want to watch. Is it 127.5? Am I calling it out right? Yeah, it says so. 127.5. I was just looking at that line here, but realizing the gold is actually down there. That's 124. Okay, very good. That's it. So pop over to the website if you want to find out more. There will be an offer to join us and our community so that you too can learn how to analyze charts like this and work on becoming a more efficient trader where your stops and your entries are known and your targets, and when you might get over performance, how to manage for that, how we use volume by price, and a whole bunch more. I'm Francis. Thanks for watching. Share and like if you did. Otherwise, hate and reverse share, whatever that means. Anyway, bye for now.